Hello everybody, welcome back to another video on the channel, and today we're going to be taking a look at SPY today on the 1st of February. Big day today, FOMC of course. SPY went up about 1%. We've been seeing these kind of choppy days for the past little while with some, kind of weird moves up and down, and then we had, a big run up for FOMC. All right, now you guys do know that I particularly choose not to trade FOMC usually because I'm a very risk-off, A-plus setups, not, gambling type of trader, and FOMC is basically against every kind of principle that I go for. It's moves without any without any technical analysis behind them. They're just straight fundamentals, based on what the news is, and just kind of big massive candles up and down. That's not something I'm very interested in participating very often, which is why I won't be talking about trades that could have been taken during FOMC, because those trades do not follow my way of trading. Okay, but I will definitely am going to talk about the trades that I think were I think it was a pretty actually nice way to trade SPY today leading up to FOMC. Until we got some pretty massive chop here, there were some pretty nice setups all over the board. Okay, so we open up, we see these kind of wicks right here on the top. Okay, and we create our first resistance of the day. Okay, so when we create this resistance, I automatically plop this red line. Okay, this is also backed up by the pre-market resistance right here and by these supports. So what am I telling myself? I'm like, all right, this is a validated level. We have some resistance, we have some support. It was most recently a resistance. If we break above it with some good volume, I'm going to be looking to take some calls off the retest. So we break above right here with 162K of volume, and I can see that up here with my volume indicator. Okay, so we break through, and then we have a pretty clean retracement back here with the candle that touches this line back here with 102K volume, which is less than the volume that pushed us up. Now, the only thing that worries me right here is this kind of candle with this massive volume. But if you're following my rules, which you have to do if you're playing my style, you don't deviate away from your rules, and you don't start making, your trades based off your, some other caveats that you see. The rules are that you check the candle that pushes through the level, and if it has more volume than the candle that retests that same level, then you take a trade. So I think this was a pretty nice call entry. I took it here. If you would have taken it here, you would have had to scale some at that resistance, and then maybe at this wick, and then you could have rated all the way up with your runners all the way, to whatever. But the most important thing is you get in here. You set your stop loss probably at a close below this wick, and then you scale right here. Like 75% of your position at this point should have been scaled. I scaled quick at other areas that could, go against me. We had a clear resistance right here, so I'm expecting to find some kind of resistance right here possibly. Didn't happen, but you never know. Next play that I think is pretty good right here, I'm going to quickly pull this away, is this flag play right here. All right, we have a clear resistance right here, okay, at those bodies. I put my lines at the bodies. All right, we have a nothing happening in between that, and then we have this flag. We break that massive candle, take puts here, could ride it all the way down here. No stress. Next up, we did have this trend line after those first two touches. You could have taken puts on the third one. This fourth one, you could have also taken puts, but I'm going to put it in yellow because the more I'm playing trend lines and watching trend lines, I am noticing that the more times the trend line has been touched, the more likely it is to break. Now, this is a given, this is known, but I haven't thought of it this seriously until recently, okay? I'm starting to consider that more, and I'd say after the fourth rejection, maybe you're looking to play lottos. The reason I'm playing it on the fourth already and not, after the fourth is because we kind of have a loose trend line because of these wicks. That's why I'm playing a little more lotto on this one, okay? But, if you're playing this trend line all the way into here, this is pretty late after this. And if you're taking puts here, you're playing more lotto. It's kind of, the more touches, I'd say after 3 or 4, you want to start, being more careful. The most ideal is taking it on the 3rd. That's the most ideal. The first 2 rejections or bounces, and then on the 3rd you take it. Okay. So those are that right here. Now, this in between, there are no good setups. If you look everywhere all along the board, okay, there are really no good setups. All right. If you look at right here, we have less volume than on that candle. Okay. So all of this stuff is kind of, all these trades right here would not be good. All right. Especially since you notice that we went up. All right, the patient pot shot setup, which was what some people trade, is good when we're following a trend. If we break this high, we retest. If we're going here, we're going back down, we're going here. All right, you're looking towards more, golden snipe entries, more trend lines, more flag plays. The patient pot shot is for a good trend, which we haven't been getting much of lately. Okay. So this right here, pretty nice flag play. All right, we see some support, nothing in between. All right, we come down, we have a flag, take it on the break, ride it all the way up. Very nice trade. So even if you did get caught up in one of these, maybe possible trades in this chop, you would have made it back on these flag plays or these trend line plays. Okay? So that's the most important thing, that if you get into a trade that is going against you, you get out right away. If you're in a trade that's going your way, you scale quickly and then you hold runners. So if you're taking 5 contracts right here, for example, all right, let's say you took them right here. You'd want to scale out of 3 contracts, all right, probably at this point, okay? Now, yes, this would be a small gain, okay, depending on where you took it. But this would be, 3 contracts could have made quite a bit of money. But then you hold the other 2 contracts probably all the way until this support, because that's the next kind of level of that we could resist. So, you scaled some here and then you held another 2 to here. That's a pretty good profit. Okay. Now, some people are like, why would you scale so quickly? I want to lock in some profit because I know that we previously rejected this kind of area already 2 times. So I'd be scaling quick. All right. Now, right here, there was a trend line you could have possibly played, but again, we're kind of chopping in this area, and we have these very small candles. If you look at the chart like this, we have these very small candles. Okay, that's something you usually want to stay away from when playing the patient pot shot setup, especially. Okay, but there definitely, could have been some possible trend line plays. This whole move down, basically no way to catch it. There was really no support resistance that was really clear that was created anywhere here. Okay, so yeah. This chop at this point, I was like, maybe not going to trade, okay? Because we're failing to have a significant trend. We're kind of getting chopped up, and, we're in the same range that we've been for a while. Especially when we were right here in this same exact range for a very long time, you might want to stay out of it, okay? And, there really was no good setups all over the board through this chop, okay? Right here, I'm going to mark this as a good trade, but again, I would not have taken it because we're in the chain chop. I don't just tell you that the trades that work, you should take, but the trades that don't work, you shouldn't take. I would really not be interested in taking kind of any of this. I'm going to highlight it and say that, this was one of the trades kind of following my setup. We have a resistance, we break above, retest, and we go up. But just because we're maintaining this kind of range, I wasn't very interested in this, all right? But one thing you can look at is notice how all of these candles are kind of, small, big wicks, kind of all over the place, all the way right here. And look at these green candles that led to the good move. Very structured, 4 candles, minimal wicks, strong, bold move. Solid retracement with a normal kind of doji candle, okay? Perfect. While all of this was chop, all the information is in the candles. When you have good candles moving, that is more likely to aid you a better result in your trade. This right here is just something I wanted to point out. All right, we have 73K volume here, and then we have 66K volume right here. Okay, so this was a trade that, it was a trade that could have been for puts, but the reason I would not take this trade, there's only one reason, all right? It kind of looks like an okay setup, okay? But just the fact that it's right before FOMC, I'm not taking it. Right before FOMC, people are loading in their positions, okay? There's a lot of volume flooding the market, and this volume is very, sporadic and spastic. There is no real way to know. There's really not much of a chart that follows technicals, like before FOMC and then during. Okay, that's why I wouldn't take it. But if you did take it, you're definitely taking a lotto, and you're expecting to, get out of it really quick. When you're taking a trade 5 minutes before FOMC, or you're taking a trade 5 minutes before the market closes, right, or 5 minutes before you have to leave your home or whatever, if you're putting a time limit on your trade, that is the worst thing you can do. Because sometimes a trade needs a little bit of time to play out. Sometimes it's going to chop around here a little bit, all right, and then go in your direction. And if you have that time limit, you're not letting your trade play out. You need to go into every trade with a plan. You either get out at the stop loss, or you take your profit at the profit target. If it chops around between those two, there is no reason for you to get out. All right? So, unless it's just very exaggerated, like a really long kind of chop. All right. So after this, it was FOMC. I'm not going to talk about any trades during FOMC because I don't trade FOMC. Okay. But, we did have this kind of pretty massive move. All right. What usually happens is we have the first move that's down. Okay. And very often I do see that the real move is up. Okay. We had the first move down, and we even had this kind of chop here, and then we had the move up. Okay. So, if you're the kind of person that likes to play FOMC, just only play with money you're willing to lose, but then don't be like, all right, I have to make all this money back. All right. This is not trading. Playing FOMC is a literal gamble. Okay. It's basically a gamble. All right. So yeah. But that kind of wraps it up for, for my recap of SPY. If you guys did enjoy this video, found any value whatsoever, make sure that you guys smash a like, subscribe to the channel, and do be sure to join the Discord community in the description below, where we do all of this kind of trading, all of this kind of talk. I am, haven't been able to be much active recently, because, I'm very, very busy with, a lot of things, but, at some point I will be getting back to being very active in there. So, anybody in the community, thank you guys all for the patience on that. But yeah, thank you guys all for watching, and I will see you guys in the next one. Peace out.